Hey everyone, welcome to Never Give Up podcast, our third episode, guys. Great to have you here. Always like, subscribe, share, get us checked out. We have a good topic for you guys today on FHA and loans in general, but let me introduce everyone else. Of course, we have
Rocky.
You guys doing? How you guys doing?
Let's go.
There
I'm
we
here,
go.
guys. Rummy here, and you got my boy George.
You got the trios.
What are we talking about, George, today? What are we talking about? We're talking about
What
FHA and how to build your wealth and how to get it started from a 4-family, 3-family, 2-family, and if you want to go to a 1-family too as well, and how to put down less down payment, right? Get your credit score up, how to utilize the system in a way that it benefits from you and you could walk away with more profitability. So let's just go through a FHA first of all.
Yep.
Guys, what does the FHA means? What is it designed for? What is it? How would it would help you? Anybody wants to dig into that?
Well, I'll go with a lot of people have the skin level of it, like the service level, which is 3.5% down. But overall, it's a great way to purchase your first house, guys. It's actually a multifamily. If let's say you're moving out, you have a group of friends, you want a roommate, but you don't want to really rent, or if you're a single family, if you're a family, my bad, the real estate terms. But if you're a family and you want to buy a first place, we rent out the other unit, so you have residential income coming in, a 3.5% mortgage. FHA is really good for that. And I feel like it's really good investment tool and a way to leverage that a lot of people need to know.
Yeah, I definitely think it's a great way for you to actually start like house hacking. You first
definitely
use it because you can use it from 1-family to 4-family unit, which is a multifamily. You get a 4-family unit and then you switch. You keep. Once you buy it with the FHA, you can use the FHA multiple times. So you actually go ahead and use the FHA program again and buy another house. And then you just keep house hacking until you have multiple units owned and just starting off with a 1-4-family house.
Yeah, and a lot of it has to do with, make sure that you get to find the guidelines in your local FHA guidelines and speak to a mortgage experts too as well. They keep changing. But what we know as so far, so FHA was created for somebody with a low down payment, right? You don't have enough down payment, or to get what is federally government backed mortgages. That means the government is going to go ahead and back this up in a secondary mortgage process. So once you go to your retail, let's just take Chase, Wells Fargo, any retail person that's taking your loan, they will go ahead and then they will guarantee that the FHA will be bought by the government entity. It could be, Fannie Mae, Sonny Mae, and so on and so forth. So that's the main reason. There is a particular guideline that you have to follow. So make sure you get with your lender. If you don't have one, click below and we'll get you the right person. But there's an avenue that you could really take in order to really build wealth through this. And if you're smart and you're starting off and you're young and you got some income coming in that you want to leverage the rental income to kind of break it down for you, where you could take that rental income and put it as your 80% of the income that you're getting from the rental towards your income to qualify for a mortgage, this is the best way to do it. So let's start breaking it down. Where the FHA is, again, it's for anyone that hasn't bought a house yet, right? It's going to be hard for a lender to say to you, hey, yeah, I'm going to go ahead and give you an FHA loan if you haven't bought a house. Now, again, there's some guidelines that you could go through to get more information about it. One of the guidelines is we know that if you go into a 4-family house, let's just say you occupy one of the unit and you have 3 other units, and just for number's sakes, each unit is giving you $1,000 each, right? You get $1,000 each from those units. So you got about $3,000 coming in. You could take 80% of that and count that grossly income towards your income that you're making in the job that you are. So for example, let's just give you a quick number. If you're making about $50,000 and you have 3 other income from the rental that's coming in, which is about $1,000 each, you take 80%, 816, 3,200 times that by 12, it's probably going to be about $42,000. Guys, give me a quick number real quickly. You could have an income. So it's 800 times that by 3. 2,400 times that by 12 is 2,800. So you could get about your grossly income that you could get qualified from is $78,800. It will be easier for a lender to give you a mortgage based on that, right? Does that make sense for you guys, right?
Of course, yeah, it makes a lot of sense.
Of course. And not just that, you also could get they're not so strict with the credit, they're a little bit more lenient than in a conventional loan and stuff. So it's definitely help you out with your credit situation if you're not so up there as well.
Yeah, so debt to income ratio, again, also your credit score, if it's not that, the 800, right? Everybody wants the 800. It's not gonna happen.
Also big numbers.
Nobody has an 800. I think I see my dad have 800. I'm like, wow, you're a unicorn. So 800, right? But I seen usually average of 650 to 750. That's the average that I have seen. So a little bit lenient. The debt to income ratio, that means if you're making $100,000, you could go up to 45 or 50. Again, guys, we're not experts. Just want to let you know in mortgages. So contact your mortgage lender. If you don't have one, we can provide you one too as well. So let's talk about that, building wealth. How do we actually build wealth with an FHA, guys?
Well, for FHA, you get a property. Let's say a multifamily in the Bronx, $900,000, 3 units, right? You get an FHA, use it, you and your family, and you qualify for more because you use a rental, just as Remy says. You have the property. You have a low amount of equity because you did 3.5% down, but now you have that massive amount of property and that rental income coming in. Your $50,000 is now 85 or 90K, depending on how much you charge, or even more because it's the Bronx. That way you can use that money to pay down equity and live rent free.
Yeah.
Basically having more money that you can use out of your pocket down the line, and actually more money to save up for other things in the future.
So you go from a 4-family, and then what you could do after 6 months or a year, again, in guides, there's always a gray spot right there. Go in there, and then maybe a mile away or 2 mile away, and you want to say, hey, okay, I want to buy another one. Now you could go ahead and purchase another 3-family. Okay. Again, that has to be your primary residence. By the way, FHA has to be your primary residence. It cannot be a secondary. I think we said that in the front. So you got a 4-family that's paying for itself. Remember, 3 units is paying for most of the mortgage, right? Or you're just paying a little bit out of pocket. Now you got your unit 12 months later. You rent the whole unit out. Everything's functioning by itself. Now you say, hey, you know what? I got another 3-family that I could tap into. Can I use an FHA loan with a low down payment? By the way, guys, I think recently I just did that on all the properties that I brought. To this point, I never actually used more than 5%, especially this one that I just brought right now. And why? Because I don't understand sometimes when you have that in front of you, a FHA program, utilize it, especially as your primary residence, and you could go with a lower down payment. You could go with a lower down payment. And again, it's just convincing the realtor and the seller and packaging that correctly. And especially in this marketplace, you see what's happening right now. Sellers are like, give me the offers. So this is a great opportunity.
And I just said it's all about having a great realtor by your side so that can actually present your offer the right way. And, let's not also just talk about the good of FHA. FHA also has a bad part, which you have a mortgage insurance that you're being charged a little bit extra a month just for mortgage insurance, guys. We don't want to just give you all the good and put out the bad.
Man, Rocky always giving the bad stuff.
Yeah, look at that.
I have to, man. I have to.
He's giving you all the bad stuff.
Look at that.
Oh, man.
Yeah. So again, what Rocky said, he's correct, right? There's a PMI. There's a PMI because guess what? In 2007, there wasn't a PMI. And then after that, the market crashed. And then the government said, we need to be protected. So they put an insurance on your mortgage. God forbid you can't make it. They're insured. And we talked about that, George, right? You got to be insured.
Yep, you got to be insured, guys. Remember that. You got to be insured.
George just got on a quick little accident. It's like, damn.
Yeah, I learned my lesson, guys. You learned your lesson too.
It fucking happens, man. It happens. But anyways, so making sure the government actually had they're going to insure your property for FHA because they want to be protected, right? And then when you build enough 20% equity into the house, then that PMI could get off, making sure that you read the fine lines. George, am I right?
Yes, read the fine line, guys. Don't make that mistake.
Come on, man. I'm going to crack up on you.
No,
today,
go for it. Go for it. It's
man.
funny. It's funny. Hour-long phone call.
Read the fine lines because we know that in 2007, 8, and 9, when you didn't read the fine lines, the PMI didn't go away, right? Right now, there are loans out there that allow you to go away or you could refinance. So make sure you do that. So let's go back to now. You bought a 4-family house, 3 of them units are rented out. And again, this is great for anyone that's starting off. I mean, it's awesome if you're starting off this. Try to go for a 4-family house, low down payment, great credit score, good credit score. Yes, you're going to pay, I forgot the ratio was 1% or 0.1%. I'm not too much into the details of that, but we'll get you that information. Then what you say a year later, everything is functioning fine. Now you're sitting back, man, you know, you bought it at 18 or 20, 21 or 22, right? Now you could say, hey, what about me buying another house? And that will be your next house, which is going to be your primary residence. Ideally, you want to make it a 3-family house, right? 3-family house, and the 2 of the units, you should have some equity in the other house by now, or you should have enough saved. Remember to make sure that you are disciplined. If somebody was renting out currently, so you're living in a 4-family, the 1 unit you're paying $1,000. I'm going to go with basic numbers, right? I know the rents are crazy right now, so I'm not going to talk about that. You're renting out yourself as a real tenant. You're saving that $1,000 away. You're putting that $1,000 away. Within a year or 2 years, you could use that as your down payment for the next property. And you could do that the second time, again, using your FHA, okay? Mm-hmm. So where do we, I mean, breaking down the numbers, even if a 3-family house, you got to make sure that one of the important part about this whole FHA, it's going to be that it pays for itself, right? You don't want to try to put out money out of your pocket that you have to go work, or, you know, it's coming from somewhere else, that the house is not carrying itself. The mortgage, the PMI, which is important, insurance, okay, and also your electric, your gas, or your Con Ed, whatever that you're paying for that portion too as well. Make sure that that is covered. Taxes is covered, okay? And lastly, you have a reserve. So you got 5 things that needs to be covered. The last one is getting reserves. My recommendation is almost have about $5,000, about 5% if you want to, or minimum of 5,000 up to 5% reserved for God forbid something happens. And God forbid is, okay, you know what? I got to put on a new roof. Boiler goes out. So you got to have those reserves put aside for you, so that that one investment that you have is literally functioning by itself. And all you got to do is put good tenants, got to have everything in automation. Technology is great right now. And now you're looking for the second property, which is a 3-family house. All right, guys, what do you advise on a 3-family house right now, especially in its marketplace? I know we don't have enough inventory. Mm-hmm. What do you advise how they should find that 3-family house? How they should, we know they gotta use a good realtor, right?
Yeah, of course. They use good realtors. Everyone here.
How do you advise them in going about, especially in this market, you know, interest rates are high, inflation is high, but sellers are coming out. There's some frustrated sellers that are coming out. How do you advise them to get the right property right now?
A lot of ways. Go for it, Rocky. No, it's too late. You got it first.
I mean, it's also about, once you sit down with a mortgage lender, really break down your finance, exactly what you can qualify for, and just breaking down the number of a 3-family before you get in. You know, like basic number, make sure that each unit can be able to carry the second house itself. And that doesn't affect your first house that's already being fully paid off for the people you have fully rented for. That's really my opinion on it. And, you know, we work with a couple of great lenders that can actually offer a couple of great programs that's out there right now. You know, like the 2-1 program and so on and so forth.
Agreed. You know, finding a great lender is really important, especially also getting your finances right, making sure exactly how much, you know, you can afford right now with the 3.5%, where you want to tackle. I always recommend, at least this is from the books I've read and things I've sold, you know, you guys can add input in there, is attack a neighborhood. You know, if you already, you know, lived in the neighborhood before and you bought the house there, you know how it is, you know the community, see what's selling around that community as well, because it's more likely it's going to be the same type of family, like multi-house family structure. And it's really easy, convenient if it's right in the same neighborhood.
Yes.
And that's awesome, right? I mean, you guys got different experiences from different generations of people here. So yep. You're going to get somebody who just said, yeah, I've read this in the book, right? I mean, think about that. We all going to be reading in the book, and that's great. I'm not saying that's wrong. That's what you got to do. You got to pick up that book. And the first book I always recommend is Rich Dad and Poor Dad, right? It's the 4 quadrant that we're talking about. So, yep. So that's awesome that you just said that. Now, I'm going to go into the experience of it. So when you go to the 3-family house, guys, he's 100% right. Familiarize yourself with the community, but if you have to get out a little bit, you can. Again, I want to keep saying the guidelines, because I want to make sure that you are embedded that, hey, I'm looking over here. Does it meet the guidelines that I'm looking at? Right? Because I know there's a guideline. How far are you from work? What location it is? So on and so forth. I'm going to keep saying that because with FHA, you got to understand its guidelines. With FHA, you cannot get a broken down house. With FHA, you cannot get a foreclosure. You can, but it has to be livable, right? With FHA, there's okay, you know what? If there is an illegal apartment, you can't get that. So there's a lot of guidelines that are out there that you need to be aware of. Now you got your 3-family house. You spoke to a lender. You're looking for a property that you understand that it has to be in this budget. Rents has to be in this budget. And now what you're looking for is a property that will pay for itself. Again, you will use one of the units. The other 2 units is paying for the whole building. Now it's going to get a little tricky right now. Why is it going to get a little tricky, guys? And I'll tell you, because now you don't have one unit. So when you have a 4-family, it's 25% that will pay for, each 25% will pay for the mortgage or, everything else. Now, when you go to a 3-family, it's 33%. So there's 33% chance if a tenant doesn't pay you that you got to come out of pocket. So even more, you got to make sure that is the right property, that you're targeting the right property. It's a livable property. And if it's not livable, that you could fix it and you are going to fix it. And I'm going to give you my experience a little bit. When I first got into this, I bought my 3-family. I was in the basement. I did a FHA. That's what it was at that time, 2008, 2009, making a good money. But one of the problems that happened over there was I got friends with the tenants. Do not become friends with their tenants. Do not become friends with their tenants, right? Don't go have a drink with them or say, yeah, I understand what you know. Strictly be a landlord, which is a business owner, right? A business owner showing up, I need my rent, regardless of what they're going through. Be lenient if you can, but don't give them 2 or 3 or 4 months, which I did, guys, and I lost a lot of money. I trusted them, right?
Wow.
Right. So one thing I learned about that, I didn't have a nest egg. I was using that money. I was young. I didn't understand. Nobody really taught me and nobody really educated me. And I was using that money. I was making good passive income. $2,000 a month was great for me at that age,
At that time too.
Huh?
Yeah, at that time too.
At that time too.
I know. And yeah, it was a headaches. Yeah, we, had to go clean the snow, but I was young. I could have done it. I did it. But what I didn't do was really have that little nest, right? I had a leak in the roof, put my whole side down. I didn't want to spend the extra money. I was being cheap, being honest with you. And in the long run, it actually cost me a lot more money, right? I could have gotten a new roof. I could have gotten new siding. I could have fixed up the whole stuff. I could have put that money because I didn't have it, the nest egg. Guess what? I end up spending a lot more money in the long run. So got your 3-family house, guys. Now you're at your 2nd-family house right now. You're 2 years down the road. It's making you either money or one of the most important thing, if option 4-family is giving you a little bit of a passive income, guess what? Put that away. Put it in a separate account. Get the separate income coming in. Put that away. Don't touch it. Be disciplined on not touching it. Right? Now, pay off as much as you can. All right. Make sure that you got the next step. 3rd family comes in. 2nd family, but 3-family comes in. Make sure it fits all the criteria. Make sure it's making you at least paying off the mortgage, at least paying off the taxes, at least paying off everything. If you got to put a little bit in, you might have to. Not a big problem, right? Because now you're building equity. You're also paying down the principal. You're also saving on taxes. You got 2 properties that you have right now that you're saving on taxes.
In total 7 units.
Huh?
And yeah,
I said
7
total
doors.
7 units.
7 units just with the FHA, right? This is what we're talking about when we're talking about what? Building wealth, right? Never giving up. You got to figure out a way. Never giving up, right? Figure out a way. Educate yourself. Get around real realtors. Get around, right? Real people that have done it. Go look at this story. Now we go on to a 2-family house. This is where the tricky part comes in, guys. This is really, if you don't have your situation corrected right now, your income should be up. Salary should be up. Your credit score should be up if you did everything correctly. Now you're moving yourself into a 2-family house. Who has brought a 2-family house right now? Rocky, go ahead. What happened?
There you go, Rocky.
Well, now when you move into a 2-family home, you want to look at the numbers again. I have a live in the middle floor, and I have the basement, and I have the 3rd floor, which I have rented out. So when I did the numbers, it's about real numbers, guys. This is my legit number, honest speaking. My mortgage is $5,400. I rented out upstairs for $3,000. So I'm coming out of pocket about 2,400, and you know it's good because at the end of the day, the mortgage, half of the mortgage is being paid for, and I could move out because I already have a year here and I've been saving money. I could go ahead and do the process all over again and buy another family, a single family now because I bought the two family first, and keep house second. So the whole thing is, I never got friendly with my neighbors. You could use a Rota. Rotas have a program that they could manage your property for you, that they would charge the person and just send you your money like here, 1/8 pay you, here 2/8 pay you, and they just worry about that. You just got to worry about saving your money, and everything is being, you know, processed for you with so much system out there nowadays.
Yeah. So I want to ask you a personal question. Did you buy it at FHA?
Yes, I bought it with FHA.
There we go.
Good boy. Good boy. I would have seen a 4-family, but
Yeah.
that little one.
Start somewhere.
Hey, listen, we're gonna call each other out, guys. This
Yeah.
is no shame in our game. I mean, we're gonna learn through this whole process, and we're hoping that you guys will learn as well, whoever's listening out there, so that way you could get real live examples of making mistakes and being the grind. I hate it when everybody just gives you a raw. I mean, I know that the big leaders out there and people who have grinded through, but I feel like I don't hear the real examples. I don't hear the mistakes, the freaking like kicking the ass like George got today, you know.
Kicking the ass, tell you that.
Right? A lesson learned. And how do we grow from that? How do we become stronger? And 18, you know, I have a goal for my kids. At 18, their first investment, they gotta get into it, right? You know, get your first investment, get your first investment, and we're gonna embed that into their head right now. All right, you're in the 2-family house. You heard it from Rocky. Make sure that it pays for half the mortgage, right? Before we were trying to make it where majority of the mortgage is being paid. You're not gonna have a 2-family that's gonna pay for everything, guys. It's not gonna be realistic. Okay, you might have to go out of the state. Yes, it might be realistic over there, but if you're out of the state, again, it's all about numbers. Numbers don't lie, right? Numbers don't lie. So Rocky has a house, $5,000 in just mortgage, taxes, and everything.
5,400. That's mortgage, tax,
Insurance. You don't electric bills.
No, that's not electric bills. No. That's just the mortgage.
$6,500, right? Let's just round it up to that.
Yeah, well, with light bill and everything, 65.
$6,500. He still got half of the mortgage getting paid, and that's a prime example that your half of the mortgage is gonna get paid. But you have 7 units now. You're up to 8 units, right? The other 2 units, do not try to commingle. Hey, I'm gonna take that and pay this off. Do not do that.
No, because
you already are disciplined in those 2 elements of those 2 properties, right? And if you can, you didn't hear it from me.
That's secret, guys.
Look at that
Put it
secret,
in the
guys.
LLC.
Get close.
Each one of them by themselves.
Put in the LLC, refinance, a 15-year mortgage. Do something like that. Well, anyway, if you can, but you didn't hear from me. I'm not an expert. But anyways, you know, we got to throw that in there. All right. Yep. So you got a 2-family house. It's paying for half your mortgage right now. Your family is living obviously in a bigger place, bigger backyard, bigger everything, because quality does matter at this point, right? Quality does matter. But make sure what Rocky just said, hey, even if I rent on my current unit, how much can you rent that out that for?
I could rent on my current unit. I would be 3,000 each. So it basically will cover almost everything. Then the parking spot, I have 4 parking spots. If I rent out 4 parking spots, I won't pay a penny here. The property will pay for itself.
Yeah.
All right, we're gonna go with 3 and the 3, and then he got his parking spot that he's gonna get a taxi driver or somebody that needs it. I do it for one of my units too, as a right now too as well, guys. Now he has what? The 4-family paying off. Sorry, not paid off. Is being paying off by the tenants, right? Yeah, you're gonna work sweat and equity in the beginning. Second one is a 3-family with the FHA. Now I'm pretty sure he could get this for the FHA with the 2-family. Right now, you have about 8 units that you utilize the best thing in America right now with a low down payment with the FHA, right? And then the single family is just a single family. This is where you'll buy your house for your family and you're going to live in that, right? But now you have equity built in. You have principal that's been paid down. And then the next segment, we'll talk about how to take that equity and how to take that principal and taxes that you're getting off from these houses, and you got a lot of write-off, guys. It's a lot of write-offs where, hey, my broiler broke. I got to go paint my XYs. So again, these things will be in consideration as you move forward. Now, what I want you to think about as you're building this portfolio is a couple of things, right? One of the pressure that you guys are going to get is that how do I find a 4-family house in this marketplace? Let's just talk about that. In this marketplace, it's hard, right? You might have to get out of the state or somewhere that you don't want to go, but try to make sure that you get the 4-family. With the in-law setup, even better, right? If you have to compromise the and the in-law setup, okay? And I'm pretty sure, again, that the in-law setup could be your primary unit, right? And I'm pretty sure as about 90%, again, don't quote me on the 10%, okay? I'm not an expert. Follow the guidelines.
So, again, I can put it on a shirt.
Follow the guidelines. Never give up.
Never give up.
Right? So go around this. Go around where you're going to get a mortgage expert that's going to work on your behalf. You're going to get who's savvy about understanding this whole investment investments in real estate, right? Make sure that you get the right and correct attorney. Second is also make sure that you pick up a great realtor that has experience in investment, not just selling in single family houses. And I'll tell you that because they need to understand what the expenses are going to be. They might make you see something that you didn't see. For example, if you have and this is a prime example that I want to share with you, you might have electric and gas being paid by the tenant, right? Imagine what oil and gas is if you're heating up the whole unit. Make sure if you didn't see that, now, if you have separate units in the complex, guess what? You don't have to worry about heat, electric, and gas. And you just got to worry about insurance and keeping the units or the house safety. What's the right word? Safety. I forgot the right word for that. Make sure it's not hazardous, right? And your headache is going to go way low. So make sure that you apply the stress-free, if you can, on your 4-family houses. All right.
Yeah.
No, good information. Yeah.
Right. Awesome. And then the tenants, right? Make sure a couple of the tenants that you get the background check, regardless of creed, color, whatever it might be. Background check is definitely mandatory. Okay. Credit score, I would definitely say try to get that. Right now, the new laws can not allow us to talk about other stuff.
Yeah.
But you could definitely do the background check and the credit score as much as possible. I've seen some great tenants in Section 8. I'll be honest with you. I had some amazing tenants. I have amazing tenants that are paying half. So to me, I had a different experience where you get in the government's help and the government is just sending you checks every single month, regardless of what is happening in the economy. That's what I mean. And if you have a great tenant that will take care of the unit, hey, God bless you too as well. So yeah, guys, I mean, I hope this was kind of informational. We'll bring in a mortgage lender. We'll talk about this in the next podcast. He couldn't show up today, but we want to make sure that we provide you with something. So let's talk about any last words that Rocky and George that you want to say. I'm sorry, I know I have a little bit more experience in this. That's why. What do you think? I mean, what would scare you right now, George? And I know Rocky, you just found a house right now, but thinking it back, and I want you to think about this question. If you knew about this or you understood about this, and Rocky just got into real estate, so I'm not going to blame him for that. But George, now you know some information that we just talked about. As a young buck coming in and looking at this, I mean, you feel scared? Like, I want to go into, like, you know, when I brought my first multifamily, I threw up. I had butterflies, man. I was like, holy crap, this is really happening, right? I was like, I think 24 or something like that. And I brought my first house and it was just crazy. Like, I'm really getting into this, right? Responsibility at a young age, like, oh my God.
Of course. Tenants is what scares me. The idea of tenants and figuring out that, because I don't want to get attached to them. As you said, Remy, I feel like I would make the same mistake. And so because of that, I don't want to get that attachment necessarily and keep it like, you know, landowner. Also because there's so much to manage, and I'll definitely try to go for the 4-family with all the knowledge I know now. And it's like, it's a lot because you think to yourself, all right, I got this. I mean, you're motivated, you want to do it, you get forward, you get through the process. But then now when you have the keys in hand, you're like, shit, now I got to get this moving. I got to do this now. I got to find people to live in here, or I'm going to pay that mortgage every month.
Yeah.
Yeah.
And with the tenants, be slow. I mean, my experience was I was the same exact way. You bring me back to the memory where I had one vacancy. I'm like, oh, I want a tenant. And I was young and I didn't know. And I'm like, the realtor was there and I just got into real estate maybe like a year and a half ago. And I just let anybody in because I'm like, I don't want to pay this out of my pocket, right? So take it slow, guys. I mean, it's okay if you get 1 month. You could write that off. You could write that vacancy off. You could write. You could see. This is the beauty about this whole landlord situation and multifamily houses. You could write it off. You need those write-offs. So hey, I lost this year, and with tenants, and I think that what I could advise from my experience, it put a buffer, right? What is that buffer? There's Buildium out there. There's a company called Buildium. It's $38. Send them the bill, direct deposit. You don't need to call them. Automatically send them a bill that, hey, you owe them $50. You know that it's been more than 15 days. Take them to court straight up. Don't wait. Let them know that you mean serious business. When you have the buffer, or you make somebody the enemy. It's my wife. It's my father. It's my grandfather. I don't know. My uncle. He owns 50%. Right. So if you're the nice guy like George is, just make somebody, make the enemy that's out there, and be like, yo, it's not me. It's
them. Yeah, it's not me. It's Rocky that's over there trying to charge you more money for rent. I don't know.
Yeah, no, and not just that. There's a couple of great realtors that have programs that actually, you just sign up with them and they will charge that rent and they will send a letter. Hey, you 5 days late. We have to take you to court if you don't pay in the next X amount of day. And you just save that issue and you're like, hey, that's not me. I have a partner with this house and he's the one that hired that realtor, and you just clean your hands and don't be buddies with your.
So Rocky, what do you feel right now, knowing what you know right now? You did go to a 2-family house. What was going through your head before when you brought it? Obviously, you did it for the family, 100%. What happened? Like now you know this information. Like, man, you can't go back, right? But would you still do the 2-family or would you go to the 4-family?
Well, now that I know this information, I would have went straight ahead to the 4-family first. There's the 2-family above has a bonus with a ground floor level that could be used as an apartment. But I would have definitely started with a 4-family and then moved down to a 3, 2, 1, and then get a real 1-family home that I really wanted. And a couple of years of grind doesn't hurt, guys. Couple of years living with other people where the end goal, you picture it, go on Zillow and find that 1-family you like and just print it out and have it there in your nightstand and look at it like, and that's what you're doing and that's what you're doing and it actually helped out, guys. And I choose to get this 4-family. That word chose is so much powerful, man. I understand that, guys. I'm really telling you, man. If I could go back, I would do a 4-family first for sure.
And guys, if you need more guidance, it doesn't matter where you are in the States or even I'm not sure with other country guidelines, but in the States, definitely, hit us up. We'll guide you in the right direction. We'll educate you. We'll do a Zoom call. One of the things that we want to say, never give up, is that we all are struggling in different experiences, have struggles. And this will allow us to making sure that we are providing the necessary information that's out there. So go ahead and hit the like button, subscribe. We're going to hit you to the next video that's going to go out there. We're talking about never giving up on what your goals are. We're going to be focusing on building a legacy. And this is the first, second, third segment that we put out there. And guys, watch out for more. Subscribe, hit us up. If you have any information, the link below with all of the information out there. And have an amazing, amazing day, guys. Thank you.
Yep.
Take care, guys.
Road 2000 episodes.